in this video, what I want to do is I want to go through the market outlook for you so that you know the key levels as well as the bias to pay attention to moving forward. Now, we just came out of a very difficult trading week. So you can see right here that from 6 to 10 September, we were only up about 48 pips. So it's not fantastic results. But we do have weeks where the market is rather sluggish, and that's why we didn't really make much money. But that's just the reality of trading. So if you have not yet joined us on Telegram, make sure you join us. Okay, again, the link is in the description down below. So next week, just looking at the Forex Factory economic calendar, we can see that next week looks a bit better, but there is still a conference next week, or rather a speech on Thursday. You can see right here. So next week, we do expect it to be like this week, where there is going to be pretty much stagnant movement where the market is not going to move much. So just take note that next week is not going to be as easy as well. Okay, in a moment's time, what I'm going to do is I'm going to walk you through the key levels as well as the bias. So what I'm going to do is I'm going to be using the 3-day trading guide, which I always use to analyze the market. So if you have not gotten this, again, the link is in the description down below. I'll be using the MPE trading strategy, which stands for market condition, price level, and entry. So please go grab this if you have not already done so. So let's look at the charts right now. I would like to start off with DXY. So this is DXY, which stands for the dollar index. So at a glance, you can see that dollar index has actually found support right here. So in my previous market outlook video, I did mention that this level is going to be key because there is a form of support previously here, as well as the ascending trend line. So true enough, price actually found support here during the week, and right now it's bouncing up. I also highlighted this level right here, which is this recent swing low right here. Okay, so you can see that on Friday, it actually got supported, and even on Thursday, price didn't manage to close below it. So these two levels are still valid. I do think that the market condition is still bullish. So if I were to use the MPE trading strategy, then M stands for market condition. We are still in a bullish uptrend because we have the high here, we have the low, we have a higher high, and we have a higher low. And we have these two key levels as support, this level and this level. So the last thing that we need is we need an entry trigger. Now this actually can be considered as entry trigger because this is like a pin bar. Okay, so this looks pretty good. You could do something like this on Monday, something just like this. Okay, again, the risk to reward is not very good, and many of you will not be trading directly into DXY anyway, but you probably should note that DXY is probably going to strengthen. That means that you should be looking to short currency pairs like Euro dollar, Pound dollar, Kiwi dollar, or Aussie dollar. Okay, basically going long USD. So that will probably be the bias for next week, assuming that this level holds. Now moving on to Euro dollar. Euro dollar is a bit tricky. Okay, I would say that Euro dollar is kind of mixed. I won't really say that it's full on bullish or bearish, okay, because it really depends on how price reacts. But I want to show you the key level. So of course we have the recent swing high here. We have this low here, and of course this one as well. Let me just plot it out, this one. And the immediate support will be this one over here. Okay, this is the immediate support. If I have to pick a side, I would say that this is actually more bullish than bearish. Okay, if you really want my opinion, I would say that it's better to go long than go short, and I'll be keen to look at price to be supported here before I go long. If we were to switch over to the line chart, you can see that there is sort of like an inverted head and shoulder pattern here. This is the left shoulder, this is the head, and this is the right shoulder. So this is what I'm looking at. I would prefer to go long. If you really want a direction, I would say go long. Look for a price action candlestick pattern here. Okay, this is the key level. Just look back historically, you can see that this was resistance, this was a swing high, and over here as well was somewhat supported here. Now, the only issue is that price on Friday did a shooting star pattern right here, and we haven't really seen price being supported here. So if price is supported here, then I say we can probably look to go long towards the upside. But if this is broken, then potentially we could expect price to just retrace back lower to this left shoulder right here. Okay, this is the left shoulder, this is the head, and this could be another right shoulder over here. So just be very patient. Again, I do not know whether this level will hold, and that is why we need to follow the MPE trading strategy, which stands for market condition, price level, and entry trigger. Okay, this is the last part of the strategy that I'm talking about, entry. So right now we don't have entry of this level, but just be patient. If I do see anything, then probably we'll send it out in the Telegram channel. But if not, if you're going to trade on your own, just be wary of this kind of price levels, which is this one and this one. Okay. Now moving on to pound dollar. Pound dollar, last week I did talk about this and I did mention this level, and true enough, you can see that the analysis actually played out. I did say that this was going to be a strong support because of this level here. You can see that this level here was previously support, and here was acting as resistance. Okay, so this was Friday, Thursday, Wednesday. On Wednesday there was actually an entry trigger right here. So let me just delete this to show you what the entry could have been for you if you actually took this trade. You would have potentially entered something like this on the candle close. You'd probably be in a slight profit right now. You can see that if you actually went ahead to take this trade, the risk to reward is pretty good. 1:2 means for every dollar that you risk, you get $2. So it's pretty good. But let's say you miss this trade, then I do think that you might potentially get a retracement back into this level again. Okay, again, the same thing. You want to lean towards the bullish side because the market condition is bullish. You have a high here, you have a low, you have a higher high. If you were to consider this as a higher low right here, you can see that this low right here hasn't been violated yet as well. Okay, there's no close below this low. So for this reason, I think that the market condition is still more bullish than bearish. You want to lean towards the bullish aspect, but the key that you have to take note is that right now price is in the middle of nowhere. Okay, this is a support, this is a resistance. If you're going to be buying right here, then it's really in the middle of nowhere. So you want to be patient. If you're not already in the trade, wait for price to retrace to this key level right here. Okay, and then look for a candlestick pattern. Again, this is already covered in the 3-day trading guide. You can look for the candlestick pattern, which is like a bullish engulfing, hammer, piercing pattern. Okay, all this is covered in here. I do believe that there is a cheat sheet right here. Okay, there's a candlestick pattern cheat sheet which you can use right here. Okay, so just refer to that if you do not know what I'm talking about, because that's really covered there. So just wait for this. Now moving on to dollar franc. Dollar franc, last week I said to be patient because we are in a descending triangle. Wanted you to be patient, to wait for either a breakout to the upside or to the downside. And true enough, we got a breakout to the upside right here. And true enough, it just went to the recent high here. Okay, this level is not very difficult to get. This is just a recent high. So if you were wondering why price stopped at this level here, it's pretty obvious. Just look towards here and look towards here as well as here. You can see that there was a form of market structure at this level. So right now price has just retraced back to this descending triangle, this descending trend line right here, and this candle right here is a doji candle. So a doji candle represents indecision. Now indecision doesn't mean that you should already act on it. If price did something like close higher, something like that, and that would be pin bar, and a pin bar is actually stronger. Right now this is a doji, so I would say that you have to be a bit more patient. Perhaps if on Monday we can get a close above this candle high, then perhaps we could say that okay, this is probably going more to the upside. Okay, but I just want to highlight that this pattern right here, it's already showing signs of bullishness, because if we were to switch over to the line chart, you can see that this is the high, this is the low, and this is the higher high. So we have an uptrend in place already. And if you were to look at the previous swing high right here, you can see that price has already successfully closed above this swing high. So I would say that dollar franc is bullish. Okay, you just want to be a bit more patient. I do not know if price will retrace back lower, but this market structure here is already bullish. So just be very patient. The first level to watch is obviously this descending trend line that was broken. If not, if price were to break down lower, then of course the recent low, which would be somewhere around 0.9107. Okay, but bullish bias for dollar franc, that's what I would like you to focus on. So moving on to Kiwi dollar. Kiwi dollar is resisted currently. Previously, I did mention about this descending trend line, which seems to be holding still. I also talked about this market structure level. You can see that this is a very strong level, and true enough, price is being resisted here. Now, this seems like a double top pattern, okay? You might not be able to see it on the daily time frame, but if you were to switch over to the H4, I think it should be quite clear that this is a double top. This is your first top right here, and of course, this is the second top. Now, what is pending is that we need to see more signs of confirmation, because a double top is not confirmed until we get a break below the neckline. Okay, so this is the neckline right here. Do take note that even if you get a break of the neckline right here, there is still support right here. So there is a potential that price might just break below this neckline and then do a fake out and then start coming upwards. So just be very careful if you are trading Kiwi dollar. I would say that Kiwi dollar market structure is still more bearish than bullish, because if you look at this big picture here, you have a high here, you have a low, you have lower high, and you have a lower low, and this one is not broken yet, okay? And of course, this trend line is holding, acting as resistance. So between the two, between bullish and bearish, I would say that it's more bearish. You just have to be very careful, because there are multiple levels of support. There is a support level here and there's a support level here, okay? If we get a clean break of this entire zone, something like this, you get a clean break of this, then potentially what we would see is that price would accelerate its movement downwards. So if you want to go short, wait for this level to be broken first, then you can go ahead to take the short. Of course, you want to have a candlestick pattern right here. Okay, it could be something like this. Let me just show it to you. You could break the level, look for a retracement back into the level with a candlestick pattern. Again, it could be a bearish engulfing pattern, it could be a pin bar. Wait for a pattern here and then you can take the short down. I do not know if we will get this trade set up next week, but these are the key levels that you need to pay attention to. Now, this is Aussie dollar. Aussie dollar is looking bullish. The market condition is bullish because we have inverted head and shoulder pattern, okay, at least a potential one. You can see right here that this is the left shoulder, this is the head, and this is potentially the right shoulder that is being formed right now. Now, granted, this inverted head and shoulder is not yet confirmed because we haven't have the break of the neckline, but it's very important to note that this pattern is actually forming right now. So I would say that if I have to choose between bullish and bearish bias, I would say that's actually more bullish. Now, last week I did talk about this movement up also. If you were to switch over to the line chart, you can see that this movement up is actually a series of higher highs and higher lows. You have a high here, you have a low, higher high, higher low, higher high. So for this reason, I would recommend that you go long, at least on the daily time frame. Now, the only issue is that right now you have this ugly looking pin bar, and price hasn't really tested this right shoulder level at 0.7323. So what we need to see is we need price to retrace lower. We need to see some form of bullish price action. Again, could be a pin bar, could be a bullish engulfing pattern. Look for a pin bar or pattern right here, price action, some form of bullish price action right here, and then you can take the long. Okay, if you go long here, just be mindful of this resistance here as well as this resistance here, which is provided by the neckline of this inverted head and shoulders pattern. So moving on to dollar CAD. The market condition for dollar CAD is pretty clear. It's still in an uptrend. We have a high here, we have a low, higher high, higher low. In addition to that, we also have an ascending trend line. Just connect this low with this low and you should get this trend line. Now, if you are a bit more detailed or you are a bit more meticulous, you should also see that there is a form of inverted head and shoulder pattern right here. So this is the left shoulder, this is the head, and this is the right shoulder. If you can't see it, just switch over to the H4 chart and I think it's pretty clear. So dollar CAD is definitely bullish. The only question is, where do you buy? So I would say that this level right now seems to be holding. Let me just draw it for you. This level, which is actually the left shoulders level, is holding. However, this pin bar right here is a pretty wide pin bar. It's closing right into previous candles level. Okay, if you just look at this candle right here and this level here, So it's really closing into some form of resistance. I would say that this is a minor resistance, but still it's closing into resistance. So if you were to chase the market right now, you're really buying into resistance. So if you really want to buy, I would say either wait for price to break above this entire zone of resistance, because this is resistance and this is resistance. Break above, look for a retracement down into the zone with a candlestick pattern. Otherwise, I would recommend that you be patient, wait for price to retrace back here, or better still, come down even lower here with a candlestick pattern and you go long. This is why it's very important that you wait for a candlestick pattern, because if you do not wait for a candlestick pattern and you buy here and price actually comes down lower, then you get stop out. So remember, always stick to the MPE trading strategy. It's a proven strategy. You just need to follow the rules, okay? Market condition, bullish, price level already given to you. The last thing that you need is an entry trigger, which we don't have currently. Moving on to dollar yen. Again, dollar yen is still in consolidation. It's not going anywhere. So I don't want to spend too much time. Please do not trade dollar yen as much as possible. If you are trading daily time frame, please avoid it because it's still consolidating between the resistance and the support right here. Now gold is a bit more tricky because if you look at the market condition, it's actually up. But right now you can see that depending on how you interpret it, it could be bearish as well. So let me just break it down for you. Now you can see that there's a high here, there's a low, higher high, higher low, higher high, higher low, higher high. Okay, if you were to switch to the candlestick chart, you will see that this doesn't really look like a very significant swing low. Okay, this swing low is more significant than this. So depending on how you see it, if you count this as a swing low, then price has already violated this swing low. But if you ignore this swing low and just focus on this, then you would say that the uptrend is still intact. Now, personally, I would say that this swing low is actually countered. And right now, what we have head and shoulders pattern, you have a left shoulder here, you have the head here, and you have the right shoulder here. Okay, in fact, you can see that this was the left shoulder. Price broke above, retraced, went up higher, broke it. Now it's actually acting as resistance. So for this reason, I would say that XAUUSD is more bearish, and this level is actually valid resistance. So let me just draw it. Okay, this is acting as resistance. However, right now price is in a very tight range because this is support, this is resistance. You can see that by the time you get a bearish pattern right here, this is kind of like a pin bar or an engulfing pattern. You can see that price is very close to support. Okay, so for this reason, I would say just be very careful. You want to short into it, and even if this level is broken, then we do have this support level coming in here. So it's a very tight range. You want to go short, just make sure that you manage your risk, that your risk isn't too big so that you still get a decent risk to reward. Of course, if we get a break of this level, then there's a lot of space between this level to this level here. Okay, so if you really want to trade it and you want to be safe, then I would say just wait for price to do a clean break of this support and this support. Look for a retracement up, look for a candlestick pattern, and then you can short it down. Okay, this is the safest way to trade this. Now moving on to Euro Pound. Euro Pound is also pretty mixed. Okay, I would say it's not very easy to trade. I don't recommend that you trade this, but I would say that Euro Pound is bearish because we have a double top pattern here. You have the first top here and you have the second top here. So if you just shift this up to the neckline, then you would say that this is resistance because this is the neckline. If you can't see this as a double top pattern, then just switch over to the H4 chart. You can see that this right here is the first top and this right here is the second top, and of course this is the neckline. So price is in the middle of nowhere now because this is resistance and this support right here, okay, which is given by this level here. In fact, if you just switch it back historically, just take into account this swing low as well, then you can see that price, it's in the middle of nowhere. Okay, I mean it's closer to the resistance, but still it would be better to just be patient. So wait for price to retrace here, look for a candlestick pattern, and then you can short it down. Okay, that's how I would trade it. But I would lean towards the bearish bias for this currency pair. Now NZDUSD on Friday we had a sell down right here. Okay, but still the bullish trend is still intact. Okay, there's no reason you should be going short. You have a high here, you have a low, higher high, higher low, higher high. Now price seems to be retracing into this demand zone which I spoke about. We haven't yet get it, but I do think that next week price will probably retrace deeper to this level. So the last thing that we need is we just need an entry trigger on this level. Okay, just be very patient. I do believe you'll get it. Once we get a candlestick pattern here, you can go long. I do think that this is going to be a good setup because the trend is up and you want to be buying with the trend. Okay, you don't want to be shorting into this level or going against this entire trend right here. And lastly, we have pound yen. Pound yen was very tricky last week. Okay, in fact, you see this nasty pin bar here. This is a very, very nasty pin bar where I think a lot of people got stopped out. People who went long will have lost money. Still, these levels are still intact. This resistance is still intact. You can see that for the entire week, price didn't manage to close above on the daily time frame. If you were to go to H4, you can see that this is actually a fake out. And this is also why I recommend for you to trade on the daily time frame for beginners, because if you're trading the lower time frame like the H4 or H1, you could be buying here thinking that this is a breakout, but the daily candle actually results in a wash, okay, a wash of all these levels. People who went short here, place their stop loss above, they will have got stopped out. Okay, I do think that this level is still valid, this resistance level, and this support level is valid as well. Okay, just look left. If I were to just delete this and move this here, you can see that this level is acting as support. So for you to go short, I would say that you have to wait for this candle low to be broken. Now, between buying and selling, I still think that pound yen is bearish because you have a high here, you have a low, lower high, lower low, and this high is not violated. Okay, and we have this descending trend line. So market condition is bearish. I want you to focus on selling, but the only issue is that right now price is in a tight range and we need to see more confirmation and we need to see price breaking this level in order to go short. Okay, so that's all I have for you in today's market outlook video, right? If you're new to this channel, do hit the subscribe button. We do have a lot of trading videos on this channel to help you become a better trader. Now, if you have not yet gotten this free day trading guide, please go grab it. The link's in the description down below. You'll be taken to a website where you just input your email and we'll email it to you. Okay, please input a legit email because we will email it to you. So if you put a fake email, then you're not going to receive it. Okay, there's a lot of value in this free day trading guide, so please go grab it. If not, you will not understand how I just broke down the market for you. Okay, next week again, as a gentle reminder, it's probably going to be very difficult because we have another speech, okay, on Thursday 8 p.m. So it's not going to be easy. Please manage your risk. Do not risk more than 3% of your equity per trade. We have winning weeks, we have losing weeks. But if you manage your risk, then on balance, in the long run, you should come out ahead. Okay, if not, thanks for watching. Really appreciate it. I'll catch you in the next video.